You guys ever look at your trading screen and just feel like, bro, this is so freaking complicated? How, like, I can't understand this. Most mentors on this app, or just fake gurus in general, they got like 19 different indicators on the chart. They have 7, 12 different entry strategies, and they make a YouTube video every single time showing you guys a different 5-minute strategy that is only applicable to one single trading pair. And then at the end of the day, you guys go and try it out, and then you end up failing. Me, I keep it as simple as possible. I literally only use one strategy, and it's helped me make over $1 million so far this year. My strategy is clean, it's repeatable, and I can print money when I want to print money and when the market gives me opportunity to print money. If you guys don't know me, my name is TJR, or that's what the internet knows me by. My name's Tyler. You guys are cool enough with me where you guys can call me Tyler, but the internet knows me as TJR, and I've helped hundreds of thousands of traders be able to go from unprofitable to profitable. So if you guys are watching this video, you guys are in good hands, and I'm excited to teach you guys my day trading strategy that has helped me make a whole bunch of money, going from the position that you guys are in right now to being the position that I'm in right now, living an awesome life and being young and without a boss and being financially free. So just like every single one of you guys, I was an unprofitable trader before, and I fell into the same exact traps and fell into the same exact mistakes that all of you guys are making right now. I was watching countless YouTube videos. I was jumping from one strategy to another, adding a whole bunch of indicators to my chart that were doing what I thought was a service at the time, but more of a disservice to my trading, because I was just waiting for the indicators to tell me to buy and when to sell. And guess what? If that were the case, then everybody would be able to be rich, and we all know that it's not that easy. So I was super caught up with all these different things. I was looking to get rich quick, and I was just jumping from strategy to strategy. I was trying a strategy out for 1 or 2 days, and then I would win, and then I would lose. And the second that I would lose, I would just throw my hands in the air and I would say, this strategy is not for me. It sucks. I lost money. And I would blame it all on the person that taught it to me. And it was just a never-ending cycle of jumping from strategy to strategy, from confluence to confluence, trying to figure out these markets. It was really up until the point where I kind of just had enough with it, and I was like, look, I need to actually understand why and where price is going to move, because at the end of the day, once I went through years of unprofitability, I was like, hold on a second, like, what is trading even about in the first place? Trading isn't about making money, okay? I love comparing trading to basketball. Basketball isn't about making money. How do you make money in basketball? You are a good fucking basketball player. You put the ball in the hoop. How do you become a good trader? It's not through making money. Making money is just the greatest side effect of all time of being really good at a skill set. So in trading, what are we trying to do? We are trying to have a high probability of predicting where price wants to go pretty much at any time during any day. Me personally, I trade during a specific time, and I'll get into that later. But again, what is our main goal within trading? It's being able to predict where price wants to go with high probability. Simple enough. And once I realized that, I was like, oh, so the goal isn't to be making money. That should just be a side effect of the skill set that I have to learn in order to get that awesome side effect, right? So what skill am I trying to build? I'm trying to build the skill of being able to accurately predict price action on a daily basis. I know that's a small switch that I had to flip in my head, and to you guys are like, obviously, bro, just tell us how to make money. If you guys are saying that right now, I need you guys to shut the fuck up and listen to me, because if you guys aren't able to shift your headspace from how can I make as much money as possible today to how can I get better at the skill of understanding where price wants to go today, because right now you guys suck at that skill, and you guys also suck at making money. So let's leave our egos at the door and say, hey, what is going to make us money in trading? By being able to accurately predict where price action wants to go on a daily basis. That's all trading is. So when we can lock in on that and focus on that, then we reveal more pieces of the puzzle. So what do we need in order to be able to do that? Okay, we need to be able to know why price is moving off of certain levels, off of certain price points. We want to understand when price is reversing, when price is going to continue its current trend. Okay, and by understanding these things, what will that lead us to be able to do? To accurately predict where price wants to go on a daily basis. Awesome. So now that we've actually broken down what trading really is, it's not about making money, it's about predicting price action. This is when we can actually get into a strategy where we fill all of those holes that are necessary in order for us to be able to accurately predict where price wants to go on a daily basis. And that for me was a big game changer, because at the time I was just watching YouTube videos. This 5-minute gold strategy made me $5,000 in 2 minutes, and you can do it too. Fuck that shit, bro. I was just seeing $5,000, 2 minutes, sign me up. And then I would copy and paste it, and then it wouldn't fucking work, and I would just start screaming and crying because what my goals were wrong. I wasn't trying to accurately predict where price action was going. I was trying to make $5,000 in 2 minutes, and I wasn't understanding why price was moving off of certain levels. I was just saying, okay, it did this, it did this, it did this. Awesome, I'm going to enter the trade and I should have $5,000 within the next 120 seconds. But that's not what trading's about. Okay, trading is a very personal game. Okay, and if you guys don't understand why you guys are entering into a trade, then you're pretty much, boom, spinning the slot machine at the casino. Okay, and you're actually probably better off spinning a slot machine, because you could hit a crazy jackpot and that would be pretty freaking lit. But that's not sustainable. Trading is. So with that being said, let's jump into the charts, and I'm going to break down every single confluence that I use on a daily basis, and why I use every single confluence, and then how I put it together to give you guys one simple strategy that has helped me make millions of dollars in trading futures and trading indexes. And also back in the day when I was trading foreign exchange, I also used the same exact strategy. Why? Because it makes sense for me of why price is moving off of certain levels. So with that being said, let's jump into the charts. So my simple ass strategy consists of really 3 things, or I mean 4 things. Okay, the first thing is understanding the daily bias. So I'm going to teach you guys what to look for when trying to figure out where price wants to go just on the day. Okay, so figuring out where we want price to go on that day. And then from there, what are we going to be looking for? So we're looking for a daily bias. And the daily bias is going to be consisting of key levels in both directions. Okay, so daily bias is pretty much us looking for key levels where price is going to want to go. And then on top of that, not only are we looking for daily bias and key levels, we are looking for price to, number 2, react or get to those key levels and then give us a reaction off of those key levels, changing the trend towards a different key level, okay, or another key level within that daily bias. And then number 3, we are looking for a continuation off of that reversal, off of that key level, to look for an entry. And then last but not least, number 4, we are looking to be able to exit, which again, like I mentioned before, is going to be at our other key levels that we had marked out. So before we jump into these charts and show you guys exactly how to do it, we are going to break this down step by step. So first thing, what are we looking for? We're looking for daily bias. How do we do this? By marking out high time frame draws on liquidity. Now, if I were to go in depth of what draws on liquidity are, how to identify them, and then go over every single confluence, like this video would just be absurdly long. So I did you guys a favor. I made a free course for you guys. There's a link in the description. So if you guys are brand new to trading and you guys want to learn directly about like literally A to Z of how to start trading from absolutely nothing, from zero, go watch the free course and you guys will be set up from there. And then you guys can come back to this video and then apply this. I also teach this strategy in the free course as well. But if you guys already know draws on liquidity and confluences and you guys just want to know the strategy, awesome, you guys are in the right place. So how do we find daily bias? By identifying high time frame draws on liquidity. Okay, so what do those high time frame draws on liquidity consist of? That is going to be 1 hour highs and lows, 4 hour highs and lows, session highs / lows, and that's it. Pretty simple. So in order to find my daily bias, we have to look for high time frame draws on liquidity. Okay, so I'm going to be looking at 1 hour highs and lows, 4 hour highs and lows, and session highs and lows. Now, I know that that's not that much information for us to be able to develop a daily bias, but once we get into number 2, when we start reacting and start infiltrating or getting into these key levels, that's when we can actually craft up our daily bias. So we find our daily bias by marking out all these high time frame draws on liquidity, and don't worry, we'll go into the chart and mark all these out. But number 2, we wait for any of these levels to be hit. Okay, so whether it's a 1 hour high or a 1 hour low, a 4 hour high or a 4 hour low, or a session high or a session low, we wait for one of our key levels to be hit. And then from there, this leads us into looking for a reversal. So look for reversals, okay? And this is going to be done on low time frame. So we're going to be looking for low time frame reversals. So overall, we're waiting for a high time frame key level to be hit. Once that key level gets hit, we can scale down to into the low time frame and look for low time frame reversals. So more often than not, I'm going to be using either the 5-minute time frame or the 1-minute time frame. Okay, both of these work great. Both of these, I teach both of these strategies. I mean, it's really just one strategy, but you can interchange the time frames and it still works the exact same. The 5-minute strategy is a little bit slower and a little bit less risky. The 1-minute strategy is a bit faster and it's a little bit more risky. Okay, so just keep that in mind. Okay, so I'm going to be looking for lower time frame reversals on either the 1-minute or the 5-minute. So we'll go ahead and put 1-minute or 5-minute time frame. And how do we find these reversals? Okay, so you're probably saying reversal, I don't even know what that means. We are going to be looking for 3 different potential confluences, either an inverse fair value gap, a break of structure, or the 79% extension getting closed above or below on the Fibonacci, okay? And again, I have videos on inverse fair value gap, I have videos on break of structure. All of these confluences are talked about in the free course that was mentioned. Again, there's a link in the description if you guys want to fully see these things, okay? And to fully understand them. Okay, from there, I look for the low time frame reversal. Does that mean we are entering right then and there? No, it does not. We are not going to be entering just immediately off of a reversal. Why? Because we need to wait for number 3, which is showing a continuation of the trend out of that key level that got hit. So again, just breaking this down one more time, we go from daily bias, high time frame draws on liquidity. We are identifying draws on liquidity on the high time frame that have high probability of filling orders. Okay, so why do we even want to mark these out in the first place? Because this is where orders can be filled to cause price to reverse in a different direction. Okay, these lie above 1-hour highs and underneath 1-hour lows, 4-hour highs, 4-hour lows, session highs, and session lows. Once those key levels get hit, we're going to be looking for low time frame reversals, whether it's on the 1-minute or the 5-minute. We're going to be looking for an inverse fair value gap off of these levels, a break of structure off of these levels, or a 79% extension closure above that extension level within our low time frame trend. So why do we look for these things? Because we're hitting an area that has potential. Imagine if we go underneath a 1-hour low and we just press buy. That's stupid, right? But what happens if we wait for a 1-hour low to get hit, and then after that, we see on the low time frame, the trend starts to change? Awesome. But for me, that's not enough confirmation for me to want to fully risk money in the market. So what do I want to do? I see, okay, we're moving down, we come underneath a low, and then we get a reversal on the low time frame. But just because we get a little reversal doesn't mean that we're going to continue that trend higher. So what do we have to wait for? Number 3, a continuation confluence. Low time frame, continuation, confluence in whatever direction that we're trying to target. Okay, so this comes in the form of fair value gaps, equilibrium, breaker blocks, and order blocks. Again, if you guys don't know what these confluences are, link in the description for the free course goes over literally all of those in complete detail. Once we see low time frame continuation out of a fair value gap, equilibrium, breaker block, or order block, that's when I am ready to enter. Okay, so we come into a key level where price has the potential to reverse. Then on the low time frame, we see the trend reversing. Then we see the trend continuing off of a continuation confluence on the lower time frame. That's when I'm looking to enter. Last but not least, where are we looking to exit? At our other draws on liquidity in the opposite direction. So if we come down and we sweep out, let's say we have, boom, this is an hourly low. We're making a low time frame downtrend and we sweep out this hourly low. And then from there, we see a break of structure. And then from there, we see, boom, a fair value gap get filled. And then boom, we see a leg up. Awesome, we enter, and then where are we looking to exit? Let's say we have London session highs right here. Let's say we have 4-hour highs right here. Let's say we have hour highs right here. Awesome, these are going to be our targets. Boom, up into these areas. That's literally it, bro. That is it. Literally all that it takes. Okay, so with that being said, let us get into the chart and show you guys how it's done. So this little indicator, I'll leave a link in the description for this as well. This automatically marks out the session highs and lows from the day. Just makes my life a little bit easier so I don't have to go ahead and mark it out. You guys don't necessarily need it, but for me, it's helpful. So this is New York market open, or that's pre-market. This is New York market open right here. So again, what are we initially doing in the first place? We are marking out high time frame key levels, okay? So this blue line right here is London session high. This red line right here is Asian session high. Since London session already moved above this high, this is no longer a valid draw on liquidity. So we don't even want to be paying attention to this anymore. What else do we have? We have London session low right here. We have Asian session low down here, which is pretty far down. And then we can also go on the hourly time frame. We have a 1 hour high right here. We have a 1 hour high right here. And this is another 1 hour high. And then on the 4 hour, boom, this is a 4 hour high up here. Cool. So from there, we are going to go ahead and scale on down. Right when market opens, we come up and awesome. We take out this 1 hour high. So today was a little bit interesting. Not only have we had a bunch of high impact news and all that good stuff, but this was kind of a choppy market open, but everything still applies to this. So boom, right when market opens, we come up and we take out this high. Am I going to be looking for an entry directly off of this? I mean, I could if I wanted to. And matter of fact, there probably was an entry somewhere here going up to these highs. I mean, matter of fact, we can look. There wasn't much of a retrace, but we can see that the strategy still ended up playing out, except for getting that continuation confluence, because we come up into the hourly high, we get a break of structure to the downside. We just aren't able to take shorts down because we didn't get our continuation confluence, a fair value gap, equilibrium, or breaker block. Okay, so that sucks, but what does price come back down and do? Price goes down and then takes out London session lows. Awesome. Again, this is applicable on both the 1 minute time frame and the 5 minute time frame. So we come down, take out London session lows. Do we get a break of structure or an inverse fair value gap or a 79% extension off of any of this move up here? No, we don't. And then guess what? Obviously, we're not just going to press buy right when London session lows get hit and we wait for our confluences. Boom, price ends up moving back down. What are we waiting for? We're still waiting for a break of structure to the upside, a inverse fair value gap, or a 79% extension closure. When do we get a break of structure? Right here. Cool. So we have step 1, high time frame key level gets hit. Step 2, scale down to the low time frames. Wait for a change in the trend. When do we get the change in the trend? Boom, right here. We get a closure above this high. Awesome. We get a break of structure. Then from there, what are we waiting for? Continuation. Okay, in this case, we don't have a fair value gap. We don't really have an order block. We do have this little breaker block right here, which ends up getting hit. Awesome. That could be a confluence that we use. Or we can use equilibrium. Boom, from these lows up to these highs, that gets hit. Awesome. 2 of our confluences get hit, and then we get a bullish closure out of that. What do? We press the freaking buy button. When that happens, we can go ahead and put our stops underneath these lows. And then where can we go ahead and target? Oh, damn, would you look at that? Every single fucking level that we had after the fact got hit. We have these hourly highs and then these London session highs all the way up here for 1 to 5.5 risk to reward ratio. Every single one of them got hit. Simple as that. Let's go into yesterday's price action. So again, this week, we had a whole bunch of like war news and a bunch of shit going on, but you can still see that all of this shit still applies and you're still able to take high quality trades off of this. So let's get into it. We have London session lows right here. We have London session highs right here. We have Asian session lows down here. And Asian session highs are right here, but London already took those out, so we don't care about them. Let's go ahead and put on our hourly highs. We have these ones already got taken out. These hourly highs, 4 hour highs are good right there. Awesome. Let's go ahead and do the same thing on NASDAQ. Asian session lows, London session highs, London session lows, hourly high right here, and these are also 4 hour highs. Awesome. So Market opens, and what do we immediately go down and do? We immediately come down and sweep out these London session lows. So awesome. What can we do from there? We can scale down to the low time frames. Again, we can either wait for the 5-minute time frame or the 1-minute time frame. As we can see, the 5-minute time frame isn't offering us anything. So let's check the 1-minute time frame. Really not much here either, but we do end up getting, we do actually end up getting something, which is funny, but we get a break of structure off of this high right here on this candlestick. And then from there, what can we look for? A fair value gap, a equilibrium getting hit, breaker block, order block. There's really not much besides equilibrium right here. Equilibrium comes down, gets hit, we get a closure above. Awesome. What can we do? We can take longs off of that, stops underneath these lows, the second lows. And then what can we go ahead and do? We can target the highs. So our first take profit would have been hit before we end up getting stopped out at break even. Now, this is literally the same exact situation as today, where the strategy played out in both directions. So we come down, we take out these London session lows, and then we go up and take out London session highs. So we can literally see this get played out in both directions. Now let's move over to the S&P 500, because the S&P 500 didn't take out these London session lows. So the S&P price action opens right here. Awesome. We're waiting for a key level to get hit. Do we take out London session lows? No. What do? We immediately move up. We take out London session highs. So it really doesn't matter what index you were looking at. If you were looking at NASDAQ, you would have been able to catch longs up to these highs. If you were looking at the S&P 500, you would have had to be a little bit more patient. But what do we end up seeing once the S&P 500 moves above these London session highs? We move above London session highs. Then what are we looking for? We're looking to scale down on the lower time frames to do what? To be able to see a break of structure, an inverse fair value gap, or a 79% extension closure underneath. So for this case, we'll literally just use break of structure. We have a low right here. When we come down, we make a new low. Awesome. This is the new low. What do we get? We get a candlestick closure underneath that new low. Awesome. Now, what can we look for? Order block, breaker block, equilibrium, fair value gap. Cool. From these highs down to these lows, we hit equilibrium. On top of that, we come into this order block. On top of that, we come into this breaker block. Pretty much every single confluence was hit except for a fair value gap entry. And if you literally just want to stay on the 5-minute time frame, you could have, okay? The confluence gets hit. We see a move down out of that. So again, we wait for key level to get hit. We wait for trend reversal, and then we wait for trend continuation. Okay, we see a candlestick closure to the downside. Awesome. We can press short on that. We can go ahead and put our stop loss. Boom, above the second high right here. And then what can we go ahead and target? Boom, we can go ahead and target these lows. Okay, we end up hitting take profit 1, which was really good risk to reward ratio. Oh my God. Yeah, literally a 1-to-6 risk to reward ratio. See, like that, like I wouldn't even try and be shooting for the freaking stars all the way down to these London session lows, or sorry, those Asian session lows. This is a paycheck right here. Okay. Boom. We end up going down, hitting London session lows, and then reversing off of that. And again, we can probably find another trade example off of these London session lows back to the upside. That's not something that I'm a fan of doing. I typically will just want to wait for the first high time frame key level to get hit and then look for a trade off of that. I also don't trade later in the day, like at 12:30. That's not my cup of tea. But you can see how marking out these key levels and how price is reacting off of these key levels pretty much every single freaking time. We saw on NASDAQ how price moved off of these London session lows. Price immediately opened, we came down, swept out these lows, then where did we go? To London session highs. On the S&P 500, we didn't sweep out the lows, we immediately moved up to the highs, and then where did we go after that? Down to the lows. And then once we get down to the lows, where do we go after that? Boom, back up to these highs. Bro, like, I don't know how better it can get from there. Okay, at the end of the day, guys, you don't have to reinvent the wheel. You guys don't have to look for 17 different confluences before you're entering, because at that point in time, the move is already made without you. Okay, you guys just literally need to keep it simple. And obviously, I know a lot of you guys are going to see this strategy, try and copy and paste it, and then maybe you'll have a losing day, or maybe you guys will have a losing week, and then you'll throw your hands in the air and then try and move to another strategy. But guess what? I'm telling you guys, if you guys do that, trading will never work out for you guys. If I give this strategy to 10 people, I can almost promise you that at least 3 people will be able to take it, apply it, and use it and be able to make a living off of it. And you're probably saying, well, I don't like those odds. Well, guess what? The statistic of you becoming a profitable trader is that 98% of traders fail. And it's not because 98% of traders fail, it's because 98% of traders give up. Okay, so at the end of the day, it's really just a mirror image of who are you trying to be in this world, okay? Are you trying to be someone that's successful? Are you trying to actually change your life? And by doing that, you guys have to stick to this. You guys have to expand your time frames. You guys have to sit yourself down and say, am I willing to learn this to improve my life for the better? Because guess what? For me, this strategy at first, it was a struggle, okay? It took a long time for me to understand these confluences and get that market experience required, knowing when and where to enter, okay? I'm not going to sit on here and bullshit to you guys and tell you guys, yeah, bro, just like copy and paste this freaking strategy and literally tomorrow you guys will be making millions of dollars. No, that's not the case. These confluences take time. Being able to digest this strategy and then act on it in real time, that also takes time. And then also you guys are just going to get better and better as you guys practice and repeat and work on this strategy. Again, I'm making this video for my younger, unprofitable self, because if he was able to watch this video and he was able to get this advice, I'm sure his life would have been changed a lot quicker than my life was able to actually get changed when I had to realize that shit for myself, where I can't just be jumping from strategy to strategy, and I shouldn't be overcomplicating things, when at the end of the day, I need to find a strategy that helps me become a day trader, become someone that actually predicts where price wants to go with a high probability every single day. And this strategy has helped me be able to do that, and hopefully it helped you guys do that as well. And if you guys are struggling, and if you guys have personal questions that you guys need answered, and you guys are like, man, I wish I could just talk to TJR myself or get mentored by him directly, I'll leave a little link in the description if you guys want to become one of my students, so you guys can, again, get even more in-depth questions answered. Because at the end of the day, these videos I'm just making for the masses. I'm making for what unprofitable me would have needed, but I don't know exactly what unprofitable you needs. And that's what I'm willing to do for you guys, to be your teacher and to be your guys' mentor. So if you guys want to do that, I've literally made an entire full blueprint of how to go from broke, unsuccessful, unprofitable, turning into a profitable trader. We've had literally hundreds of students go through our program and become massively successful from that. You guys can literally just go to my Instagram, look at my Instagram highlights, and see all the testimonials of people that are within the blueprint right now that are having success, passing funded accounts, getting payouts. And that's the thing with me. I just want you guys to turn profitable. So if you guys can turn profitable off of just these YouTube videos, awesome. This is all you need, bro. But if you guys are like, man, I've been struggling with the same thing for months and months and months, then maybe it's time for you to invest in yourself. And maybe it's time for you guys to invest in your own future so that you guys can actually change your life for the better. Okay. And if that's the case, I'm here for you guys and I want what's best for you guys. And no, I'm not going to try and keep leading you guys on like a dumbass signal group or tell you guys, yeah, just follow my trades. No, I'm going to teach you how to fish so that you guys can feed yourselves for the rest of your fucking lives. I love and appreciate you guys. Hopefully you guys enjoyed this video. If you guys want to become my student, link down in the description. Peace out.